Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's 119th CP program organized by AASB of ICI this year. That is in this year, sir, this is our 119th CP program relating to audit standards, and various audit considerations on various matters. And today's topic is very important. That is the key considerations in the audit of NBFC. And in order to tackle this, we are having with us our eminent speaker, learned speaker from our Chartered Accountant fraternity, CA Vishwaranjan Sutarji. So on behalf of AASB of ICI, I extend my warm welcome to you, sir, on this 119 CP program of ICI organized by AASB. Welcome to you, sir. I also welcome all the participants of today's webinar because the topic is very relevant and very important. And I invite our today's learned guest speaker, it is my proud privilege with all of you to share a brief profile of our today's learned speaker. CA Vishwaranjan Sutar sir is ex-chairman of ICI Bhubaneswar branch 2021-22, and he's a presently co-opted member of Committee on Corporate and Allied Laws and Corporate Governance of EIRC of ICI 2022-23. He's a rank holder in Commerce graduate and a fellow member of Institute of Chartered Accountants of India and an alumnus of IIM Calcutta. Currently working as a partner with Messrs. SRB and Associates. Before joining SRSB, he has worked with Messrs. Deloitte Haskins and Sells, got vast experience in auditing of large sector listed companies, PSUs and banks. Apart from assurance services, being a certified IFRS professional, he is involved in large number of gap implementation, valuation and related consultation at various entities. Further, he has delivered number of lectures, number of seminars, both in-house corporate trainings as well as for academic and professional institutions like Institute of Chartered Accountant of India, Institute of Company Secretaries, IIPM, etc. on subjects like valuation, startup, Schedule 3, Ind AS, CARO, audit and assurance standards, etc. During the COVID time period also, he has delivered so many lectures on online, on Zoom, various webinars and virtual CP meetings at various platforms of Institute of Chartered Accountants of India. So this is very vast. So without wasting much more time, I request our today's respected speaker, C. Vishwaranjan Sutarji, to please enlighten all of us on various intricacies on and various considerations on audit of education sector. Over to you, sir, please.
Thank you so much, sir. Thank you once again to SB and chairman of SB and vice chairman in their absence. There is actually a learning point for us also to be a part of the endeavors of the institute. And it's fascinating to see after a long gap, continuously the committee is doing micro-level topics, which actually benefit the profession. And the topic chosen today is education sector. And it is very interesting. I thought of relating on this, I thought what to say, but when I digged in and institutions, very interesting space and challenging space also.
Sir, sorry to interrupt you. I hope there is some internet issue on your side. Sir, you are not audible and visible due to the internet issue your side, sir. MLG, internet issues their side, that side? Faculty side.
No, I'm also clearly able to hear you and just a second.
Internet connection.
Just
You can share.
It's fine.
The presentation is not coming.
सर एक बार स्टॉप करके दोबारा खींचिए.
Okay, just a second. Now is it okay?
Just a second. Yeah.
Yes, sir. Yes, sir. Make it full screen, sir. Slideshow.
Is it visible now?
Sir, screen is blank.
Please confirm me
Only
whether the
coverage is written.
sorry.
Screen is blank. Only coverage is written over there.
That's okay. That's okay. That's
Okay,
fine.
okay, sir. Okay, okay, sir. Yes, yes, yes. It is visible now.
Good to
Sir.
go.
Visible now, sir.
Yeah.
Please,
Thank
sir.
you. Thank you for the confirmation. Now, coming back to the topic, when we talk about education sector, I'll just briefly give you the outline for the sessions for say next 90 minutes. So we are investing with this topic. We'll talk about a little bit on the environment of education sector in India. Then we'll talk about regulations which are involved with this sector. Then we'll understand the space because unless we understand how it works out, putting our effort in terms of assurance is very difficult. Then we discuss a fair amount of time on finance and accounting regulations of it of education sector. Then we'll talk about the key audit considerations which are very critical for this sector. Then at the end we'll conclude. Now, as I said, this sector is very challenging and interesting. If I talk about education, certainly my mind goes and everybody will understand that is it the audit of trusts? When I talk about that it's an audit of trust, then I'm diluting the entire sector. If you look around our societies, wherever we are living in, if you see the large sector institutions, basically, predominantly though they are societies or trust, but their turnover will be staggering. And there are institutions, those who are purely into education sector, and their top line are much bigger the size of many listed companies. And if this is the trigger point, you can see the potential, the risk involved with the assurance services, and the kind of work we are doing, and the kind of gap between the expectations and our delivery is huge. Now, coming to the environment of this, the Constitution says this education as a part of state released earlier, but subsequently with the change in constitutions, it become part of the center domain. Why it is understanding this is important because when you go to the regulation side, we'll talk after say 10 minutes. There are many things which regulate this sector, and as an auditor's point of view, as an assurance service provider point of view, being aware of these regulations becomes critical. And this becomes critical because there is no straight answer as far as our delivery is concerned. So understanding this space is more critical as far as understanding the environment and regulations related to education sector. So if you talk about broadly, give you the outline for what all covers in this education sector, it talks about school education, literacy drive, all those things. Then higher education covered up in higher education, I'm covering everything, be it engineering, be it MBAs, law, medical, whatever you can think of for post-elementary education, I'm covering up part of higher education. Then the education policy new, it has something to say about this sector, and this actually impacts how this sector stepping up and behaving in the society. So we need to aware of education policy. And this particular point, education and charity, understanding of this point is more critical for us. Why this is so? Because as I said at the outgo, that when we talk about education, we talk about charity. And it is so because of there are n number of apex court decisions where they have said education is synonym of charity, or education is all about the charity. But if you talk about today's scenario, especially post-COVID, during COVID, there are many startups floated around which are into this space. And if you think of it and ask the question, is it charity? The answer, the straightforward would be no. but technically, legally talking about of it, the space is something different. We'll talk about this and try to understand this. But of late, it reminds me to good reported Apex Court decisions with related to, say, Unikrishnan's JP versus State of AP sometime back in 1993. Then there is a decision of Apex Court recently, TMA Foundation versus State of Karnataka. These two actually saved this education and charity synonym to a distinct bridge. And they define the role of center or the government and the private sector education, because as a country, wherever we stand today, our education has played a pivotal role and is going to play a pivotal role. And private sector has a bigger say in our education system as well as with the government it is continuing to do. But a distinct demarcation between the role, the regulations which are going to regulating this space, and what are the pros and cons related to this is has to be understood indistinctly. And this education and charity with these two case laws have distinctly stated what is the role of government and what is the role of private sector. Now, going forward, if I talk about regulations, like suppose I talk about, say, we are doing companies audit. So it comes straightforward that these are the regulations applicable for company for a entity audit which is under Companies Act. But when I talk about school sector or education sector, there are n number of regulations, those which are impacting the deliverables and our asset and services. So going one by one, first is the society registrations, because majority of our education sector institutions fall under the society registrations. So we need to understand a little bit of society's registration. Then Public Trust Act. So here one kind of disclaimer, because we are talking about only in respect of audit considerations. We are not going to talk on the taxation aspect of education sector. We will restrict our discussion and deliberations related to assurances services only. So societies and public trust definitely are part of regulations as far as the education sector is concerned. Then Companies Act. Why Companies Act is related to regulation? Because there are a lot of institutions, those who have registered erstwhile Section 25 companies under Companies Act 1956 or Section 8 companies now. So related to that, this act is relevant in terms of understanding this sector. Then, of course, yes, Income Tax Act, because there are a lot many exemptions and benefits available to this sector related to trust and societies. So income tax is pretty much there. Then goods and service tax, of course, yes, it is there. Then one interesting act which is a little critical in this space of education sector is FCRA. And to the audience, FCRA, because we deal a lot many company and corporate laws and mercantile laws. But this particular law, FCRA, interesting part of this law is that this is the only monetary law or a law related to economics not falling under the purview of Ministry of Finance. It is regulated by Ministry of Home Affairs. So you understand the criticality, risk, importance of this law, why Ministry of Home Affairs regulate this law. So if a Ministry of Home Affairs regulates the economic law, please understand the risk points, the precautions you need to take before doing any certifications, any assurance under this law. And FCRA are invariably there in case of any education sector or any education institute. So FCRA is one of the key critical important regulations applicable to education sector. Going ahead, there are there are in fact scores of central and state enactments which impact this education sector. What are those state and central enactment? I'll give you few because there are scores of central and state. I'll briefly broadly outline the central enactments, and statewide there are also different. You can go through later. This IGNOU Act is there. Then the Central Education Reservations Act, because in every field of education, you understand the admission process has to get validated through this reservation, because in India, in economic backwards, all those reservations are there, and it has an impact in your revenue recognitions as well. So this is something to take care of it. Then UGC Commission Grant Act, again, it is very much got impact in all the institutes wherever in higher education space, UGC. We'll talk about how this plays in finance and accounting. Then National Council for Minority Education and Institution Act, it has a role in education sector. Those are specific universities related to this. Then All India Council for Technical Education. This is also part of regulations we need to understand. And the Institute of Technology Act, it is there. The National Institute of Technology Act, then Architects Act, then Copyright Act, then English and Foreign Languages University Act, the Apprentices Act 1961. So all these are part of regulation. These are broadly the central act. I'll just go back. Sorry. Part of central enactments. There are state enactments also related to this, because every state got their own education law. So why it is critical for us in education sector is that if you go to only one institute, say university, say be it under trust, it will, all the laws will be applicable to that single institute, because under one banner, if you talk about a bigger institute in India, you visualize any bigger, you name any out of the top 10, all will be delivering engineering educations, all will be delivering medical education, all will be delivering law education and general education under same umbrella. So if everything is getting delivered under the same umbrella, then all these acts and enactments come into play. And every act and enactment requires their special reporting and deliverables. So we need to, as an assurance service provider, or as an auditor of that institute or a consultant to that institute, need to understand these acts specifically applicable to our sector and what are the requirements specifically in that. Now, we understood the regulations, what are there, and we understood the space there. How this is actually boiling down in our hands. Let's understand that. So for that, we need to understand the structure of education sector in brief. In understanding the education sector, I just broadly bifurcated into two verticals. There are government institutions, there are private institutions, and under private institutions, there are private aided institutions or unaided institutions. When I talk about aided, are there any government grants or UGC grants are there? So in those cases, it is aided. And if there is no government grants, it is not unaided institutions. Under aided institutions, private recognized institutions. Like there are some universities which recognize or affiliates a private player. So in that case, there will be recognized institutions. Like for typical example will be AICT approved institutes. Like our institute also signs MOUs with a lot of universities. So they say for foundation, we are affiliated with ICAI. Similarly, with private unaided institutions, there could be private recognized institutions or unrecognized institutions. So based on our education policy of our country, for say engineering, for medical, for architects, for law, all the institutions has to be recognized, because recognition gives a strength or benchmarking to the students in terms of their career prospects and job prospects. So there is a concept of recognized institutions and unrecognized institutions. Depending on the category of those institutions, your applicability of regulations differ, and based on the applicability of assurance, the quality of assurance services and key considerations differ. Now, coming to, as I said, we'll talk more on finance and accounting and key considerations of audit in education sector, and we'll put enough time on this. Now, coming to finance and accounting, there are a lot of confusions. And I'll say keep this confusion is there because there is no straight answer for a long time. And today, luckily, we are having certain answers, but still, in general practitioners, there are different views on this. Let's understand what are the things comes under finance accounting as far as education sector is concerned, and what are those I'll say literatures which are going to impact on us or which regulates us as far as understanding and making a deliverable in finance and accounting of education sector. First is there are few things are available and issued by our institute. Technical guide on financial statements for non-corporate entities. I'll take a pause and I'll just recall yourself that last year, many of us, most of us would have done education sector audits and attested their financials of trust or society. How many of us have followed this financial statement of non-corporate entities? If you see the preface of this non-corporate entities financial statement technical guide issued by the institute last year, it clearly says it is applicable to trusts and societies well. I'll come down where there is a gap of understanding on this and what regulations are there. I'll come down in 5 minutes time. Then coming to next one is guidance note on accounting by school. So this is a specific guidance note issued by a institute way back in 2005. So in case you are following this for schools guidance note on accounting, then the first one won't be applicable because there is a specific guideline for schools. Third is accounting standards for entities other than companies. Now coming to the first discussion, that if I have not followed financial statements of non-corporate entities, there are so many members, colleagues of mine, they question that in case of trust accounting, society accounting, why I should follow accounting standards and are standards for this trust and societies. As far as understanding of accounting standards is concerned, if you see the institute directions and if you see the kind of accounting standards are available in India by ICAI, there are 3 vertical accounting standards. One is Indes, which is applicable for respective companies wherever Indes is applicable. Then there are accounting standards notified by MCA, both Indes and accounting standards, both are notified by MCA. Those are applicable for corporate entities. Then comes a third set of accounting standards, which are applicable for other than companies. And under that, there are 4 verticals, level 1, level 2, level 3, level 4, depending on the criteria they have set. All those things are applicable for non-corporate entities and education sector, if it is not a company form. And majority, as we discussed, majority of the education institutions are not in company form. It is all part of the majority of forms part of society, either society or trust. Then accounting standards do come into picture. And it's an honest answer and feedback that majority of us don't follow accounting standard while delivering, making financials for these education institutions. So accounting standards comes into play. So now giving you a little feedback about this and regulations, because I know this is something surprise to many that why accounting standards will be there. I'll read out if I go, my memory go right. If you see the guidance notes and accounting standards issued from time to time, and preface of statement of accounting standards, if you see the preface of accounting standards, the institute has said, it lays down that accounting standards will be mandatory from the respective dates mentioned in the accounting standard. The mandatory status of an accounting standard implies that while discharging our attestation functions, it will be the duty of the members of the institute to examine whether the accounting standard is complied with the presentation of the financial statements covered by their audit. In the event of any deviation from the accounting standard, it will be our duty to make adequate disclosures in their audit reports so that the user of financial statements may be aware of such deviations. Ensuring compliance with accounting standards while preparing financial statements is the responsibility of the management of the enterprise. Now, since these education sectors are part of a space where it is majorly non-entities, non-corporate entities, in that scenario, accounting standard applicability is on us. And our reports, when we are issuing our report under SF 700, it is our responsibility to say that the financial statements are drafted as far as accounting standards have been complied with or not. If not complied with, we need to make specific remarks in our audit report. But in case of education sector, it becomes a big miss in general. There are members I know those who follow this strictly, but there are also big set of members I know I have seen in my review process they don't follow. So it's a big miss as far as our delivery and understanding of this education sector audit is concerned. So make sure that you follow accounting standards while you prepare the financial statements or when you are auditing, and make a report mention about in your report that if there is a deviation in compliance with the accounting standards. So this is as far as preface of accounting standards is concerned, and it is pretty clear on this. Now, this fourth aspect of this finance and accounting play a bigger role: reporting requirements dictated by law. What it is? Sorry. If you say as we have discussed, sorry, just a second. Majority of our education sector institutes are part either a society or trust. Those society and trust act require something different deliverables. For example, at times of financial reporting requirements by dictator law or even by donors, their education sector are prone to donations. So many a times donations are come with certain stipulations, and those stipulations could be from private entities or government-aided institutions. So, for example, the financial year can be a period other than ending 31st March. That could be a stipulations. But in view of income tax provisions for the purpose, the accounts in such case will have to prepare 31st March. So this could be the scenario in case of those stipulations and need to follow. There are different stipulations given, say, in Bombay Trust Act or Gujarat Grants in Aid Code. So those have to be complied with. So in education sector, as I said, there are different state laws comes into play. You need to be very critical about whether that state laws require, whether they require specific reporting deliverables or not. If they require, then you need to have a balance breeze between what our institute says and the state requirements, so that everything is fulfilled and our deliverables are complete. Apart from serving a tool to the measurement of performance, such statements also, these financial statements, serve another very important objective: to verify as to whether the institutions utilize its funds for charitable objective for which it exists. So, as I said, it is grant specific or donation specific, and that no part of its funds were distributed for the personal benefits of members or trustees, etc. So those has to be clearly reflected in our audit reports if it is there. Then, in case of a society registered under Society Registration Act, it is mandatory to submit annually the audited financial statements and list of government governing bodies along with the requisite fees. So those are again different laws detected we need to do. In case of FCRA, suppose an education institute has taken and registered himself with FCRA, Foreign Contribution Regulations Act. Those have to submit again annual donations receipts in form FC3. So those specific things also we need to take care of. But major challenge comes in case of trust, because as you know, till last budget enactment, in case of trust, it was the choice given. Either you can follow mercantile system of accounting or cash basis of accounting. But if you see and recall the last budget, whatever is came into picture and got enacted, it clearly says that the allowability of tax exemption, so that all your income proceeds has to be applied for charitable purpose more than 85%. If not applied on cash basis, then it will be taxable. So clearly, indirectly, it pushes towards cash basis of accounting instead of mercantile. But having said so, if you go and comply with the GST at same time, because a lot many institutions also they are GST registered, because everything under GST, even though you are in education, everything is not exempted. There are curriculums, those who are subject to GST. There are activities of an education sector, those who are to GST. Then in un-GST, there is nothing called a cash system of accounting. There is a mercantile system of accounting. So this crisscrossing and different aspects of different laws applicable to education sector make this sector very, very challenging for us to make and draw our opinions appropriately. There are regulations which demands and commands that it has to be done mercantile system. There are tax laws which talks about it has to be cash basis, and there are accounting standards which needs to be complied with. So it is the onus is on us how completely we are ensuring that everything is done perfectly and our deliverables are foolproof. These are the links, reference links I have given to those two documents. Now, coming to key audit considerations, which the subject matter of today's discussion, and what are those key audit considerations we need to specifically, critically examine, and which impacts the financial statements of an education sector. Let's understand one by one. I have listed a few, around a dozen of key audit considerations, which are very unique to the sector, and the approach to this should be different. The first is income recognition. See, in case of education sector, the income flow could be from variety of sources, and majority of income comes from students. And the major chunk of income from students are basically from three verticals. One is from their education fees, to second is towards facility fees, and third is hostel and other facilities. But in terms of income, the income recognition varies depending on what kind of course a particular education institute is offering and what is the mode of that course. So for making a right amount of correct judgment on income recognition, understanding of the course curriculum the institute is offering, the regulations attached to that course curriculum, and the category of course curriculum it pertains to is important. Understanding of that is important. For example, with COVID, and if you see large sector education institutes, something they do in company consultancy. So in company consultancy means I'm just talking about very specific items. I'm not talking about general admission fees and all those things. In company means there are MBA institutes, those who train corporate people. There are specific, say, X company, and this X company wants their senior management to be trained. So these are categorized as in company. And this in company could be in a staggered manner or in one go. Depending on the periodicities and cutoff, you recognize your revenue. Then there are MDP programs, management development programs. This is a kind of, this again senior management programs, but instead of a X company coming to say Y Institute goes to XYZ companies and they seek senior management that you come and will train, give management development programs. So it's the other way around. Again, the cutoffs and periodicity also matters in this. Then long-term courses, variety of long-term and short-term courses they give. Then due to COVID, now there are a lot many virtual interactive courses are being extended by all majority of the education sectors. So in case of virtual interactive learning courses, that could be either the education institute is they themselves they're giving that facility to their student, or they have hired or signed MOU with a third party agency on behalf of the institute. That third party is extending the course and certification to the students. And in that, we need to understand what is the revenue sharing model. the institute has gone with the third party and how that has been worked with, what are the expenses being tapped with, and what is the again quarters, all those things will come into play. There are certificate programs institutes give, and the certificate programs could vary from say 3 days to 7 days to 14 months to say 18 months, 12 months. So depending on what kind of certification institute gives, the income recognition will vary. So these are a few things which we need to understand in terms of income recognition. Sorry, income recognition. And again, as I said, the society and trust will come into handy because society and trust, as I said, can follow any method of accounting of their choice. And normally they follow cash accounting. But in this case scenario and in compliance with accounting standard, you need to make both income and expenditure account on accrual basis and for tax laws on cash basis. So we need to be very sure what kind of accounting system we are following and how deliverables are stepping up on this line. Then second is grant accounting. This also plays a major role in education sector, and there is a specific accounting standard AS12 comes into play. And there could be capital grants, there could be project related grants, there could be revenue grants, there could be specific grants like sports activity for a particular CSR activity. So based on different grants and stipulations by the grant authority or the donor, the accounting will vary. But again, you need to follow in as a member of the institute, you need to keep a tap on AS12 requirements and have a breeze between the reporting, deliverables, and compliance. So grant accounting is the second key audit considerations we need to follow in case of education sector. Third is fixed asset accounting. This is very, very challenging and unique in this sector. Why? I'll tell you. As I said, in trust, the taxation is based on application of your income. If I have applied my income for the purpose for which I have created the trust or society, then my income is exempted. And if this application is more than 85%. And the law said also, this application is not necessarily to be revenue in nature. It can be capital in nature. So as far as taxation of this is concerned, and in school education sector or education institutions, majority of them are trust, either trust and societies. They built fixed assets at cost and they apply for the charitable purpose and they claim tax exemptions. For this very reason, the practical bottleneck we face as an assurance provider is that you won't find a proper fixed asset register because they charge it off. For them, once it is charged it off and taken the benefit, what is the purpose of maintaining fixed asset register even unless it is a proper corporate governed institution? In general institutions, the fixed asset register, you will hardly find it difficult. There are also institutions, those who follow, no, the application could be depreciation. Instead of taking entire fixed asset acquisition cost as an application, they take depreciation as an application and they carry that carrying value in that balance sheet of the institution. Either of they can do. And it is not necessary also that you can choose only one method and you cannot go back to the another method. There are institutions, those who follow for a particular segment of assets, they follow that whatever acquisition cost that is there, they put it as part of application. And for some other assets, they will put it as a depreciation as an application. There is a mixed practice also goes on. And with this practice, your fixed asset accounting goes to a very, very riskier stage where our assurance service, we put ourselves in verification of it, accounting of it into a higher degree of risk. So please understand the corporate governance structure of the issue, how they are accounting their fixed asset, what is the philosophy, because majority of the time based on the tax implications and cash flow management, they tinker with the policies of fixed asset accounting in that. But as an assurance provider, as far as my reporting is goes, as far as applicability of accounting standard goes, as far as financial statements of non-corporate entities as goes, they talk about different things, and that has to be complied with also. So as an assurance provider in education sector, we need to critically examine all those situations and assess and report accordingly wherever it is there. Fourth is investment. As I said at the beginning of our discussion, that there are institutions who will be surprised that top line is much more than even few of the listed companies. And in education sector, the margins are very high. And if the margins are very high, they do a lot of internal accruals and they make huge investments in financial assets. So that accounting of those financial investments, revenue recognitions there too, disclosures there too, forms part of a key consideration in education sector. That is the fourth one. Fifth is stores accounting. Again, this is one of the key neglected areas in education sector of trust and societies, because they hardly maintain or do store accounting unless it is a proper corporate governance institute. Because for them, whatever the stores accounting they do, but whenever they procure, they charge it to P&L. There is no stores accounting available, or if it is available, it is not in line with the requirement. So this is a key area where we need to be very sure and plan our audit processes so that we can do justice with reporting and our deliverables in protecting us. Next is payroll. Now, payroll in education sector is little tricky. Why tricky? Because if you divide the payroll in two verticals, one is a technical staff and non-technical staff. When I talk about technical staff and non-technical staff, means technicals in education sector means all those teaching staffs, and non-technicals are related to support staffs. The technical staffs engaged with education sector, their payment are based on various factors, like how many credit hours of teaching they are doing to the students, how many projects they are involved with, what are those terms with those projects, are they eligible to separate commissions or benefits. All those things are little tricky and different compared to the conventional other corporate entities. So in payroll, especially related to technical staffs, you need to understand in payroll also the post-retirement benefits and other employee benefits as far as employee benefit standard is concerned, those has to be complied with. And majority of institutions, they don't comply with those employee benefit regulations. So for that very reason, payroll also becomes a key audit considerations in education sector. Now, student relations management. Student relation management, because all your income recognition is because of students. And student becomes the only one segment of, say, your receivable point or customer point. And student relationship management trigger many line of items which impacts financial statement of any education sector institute. So be it their admission fees, be it their education fees, be it their hostel fees, be it their security deposits, be it all those activities, library fees, all those things becomes part and parcel of your financial statements. And this has to be driven through brochures, one kind of RICO or reconciliations needs required, that what the brochure or policy of the institute says and how this being managed in the finance statements. So students relation management becomes another key audit considerations as far as education sector comes. Then foreign remittances. So foreign remittances could be inward and outward. If it is inward, then compliance with FCRA is required, and FCRA stipulates for what objective you have taken this FCRA benefit, and whether you are receiving money from foreign for this particular objective or not, and if and you are spending earmarked money for this objective, and assurance on this has to be pinpointed. There could not be any deviation, because as I said, this is only economic law which is being governed by Ministry of Home Affairs. So all foreign inward remittances on account of FCRA has to be critically examined. Other than this, there could be foreign remittances both inward and outward, because many education sectors, those who enroll themselves with foreign magazines, they foreign licenses, foreign collaborations. So for that, foreign remittances, whether applicable law has been complied with, income tax forms have been filed with, TDS applications have been properly dealt with or not, those becomes part of our key audit considerations. So foreign remittances, both inward, outward, becomes a part of key audit considerations as far as education sector is concerned. Next is fund accounting. This is one of the most critical item as far as key audit considerations of education sector is concerned. Why this fund accounting is important? Like in corporate entities, we talk about reserve and surpluses. It is basically a kind of reserve and surpluses accounting or fund accounting in education sector, but it has certain different connotations. Normally in education sector, a fund accounting are being divided into two verticals. One is restricted fund and second is unrestricted fund. I'm repeating again. In education sector, fund accounting are normally divided into two segments. One is restricted fund and another is unrestricted fund. In restricted fund, there are again two types, purely restricted or endowment fund. What is the difference between restricted fund and endowment fund, and what is actually restricted fund? Let's understand. Where a donor specifically mentions that I am extending this benefit or fund to your institute, and that donor could be government or non-government, and this fund has to be utilized for a specific purpose only, and this fund cannot be utilized for any other purpose other than stipulated in the sanction letter. Then this fund becomes part of your restricted fund. And many a times this donors stipulates that this restricted funds has to be matched with a earmarked investment. There has to be a matching investment with the fund size. And there is a separate audit report also. Many times they expect from the institutions that you certify it from your statutory auditors or the auditors of your institute, that the fund creation and utilization is as per the stipulations stated in the sanction letter. So this becomes part of the restricted fund. Endowment fund, whereas it is also a kind of restricted fund, but in endowment fund, the philosophical or main difference is in endowment fund, the base figure, whatever suppose a donor has given X amount of money as restricted fund or endowment fund, that X amount of money remains the same, and there has to be a earmarked investment has to be made. Any income accrued earned out of that fund has to be utilized for the purpose for which this fund has got created or the donor has stipulated. So in case of pure restricted fund, only the fund amount can be utilized for a restricted purpose what donor has stipulated. In case of endowment fund, income earned out of that fund has to be spent as per the stipulations stipulated by the donor. So this is a restricted fund and endowment fund. And as an assurance provider, we need to ensure that this fund accounting has been done as far as in line with the stipulations stated in the as far as donor is concerned. And in again, once again, for the sake of repetition, in many of the cases, donor in the stipulation put one critical stipulation that year-end annual reporting has to be done and certified by the auditor as far as creation, maintenance, and utilization of these restricted funds. Coming to unrestricted funds, these are like normal companies' reserve surplus or internal accruals, and this can be utilized for many things. Under unrestricted fund, also the government, the corporate management or governing body of that issue can regulate these funds. These unrestricted funds could be on account of your scholarship fund, employee benefit fund, research fund, faculty development fund, that could be any name. So you should normally accrue these funds for specific purposes and for a healthy financial management and to target a particular improvement in that sector. And there are also third component to this fund accounting is inter-fund transfers. As I said, in government grants, restricted funds, there could not be inter-fund transfers. But in unrestricted fund, or in case of a restricted fund, if the donor changes its mind that you transfer, there are many times you'll find inter-fund transfers. And each inter-fund transfers has to be justified with sanction letters, with permissions. Otherwise, inter-fund transfers becomes a risky area for us to deliver. And we need to stipulate this in our audit report wherever it is applicable. So as far as fund accounting is concerned, we need to go through the bylaws of the institute. We need to go through the circulars or directions issued by the governing body of that institute or donors. We need to understand the region creation specific of, say, in a particular institution, there are 20 funds, you'll find 30 funds. So each fund has to be critically examined, critically segregated, whether restricted or unrestricted, and depending on the stipulations mentioned in each respective fund, whether accounting has been done that way or not, we need to ensure. So fund accounting becomes again a key audit consideration as far as education sector is concerned. Next, going research and development. Why this is important? This research and development has many compliances and has many benefits also to the institute. If the institute is, say, is registered with UGC and registered with AICT, and specifically nowadays, the ratings of the institute, if you see people, those who are graduating, they seek admission with reputed institute. And under new government policy, and the government of India started Ministry of Education, Higher Education, they have started ranking those institutions based on different parameters. And those different parameters include your healthiness of your financials, and one segment also includes the kind of research and development activity the institute is taking care. Based on that, there are scoring points. Based on scoring points, those institutes are ranked 1, 2, 3, 4, and there are rankings also at micro level. In say medical field, there will be separate ranking. For general management, there will be separate ranking. For engineering, there will be separate ranking. There will be overall ranking. And based on the higher the ranking institute gets, it is the higher fee it commands, and it is the higher students they command. So for them, carrying out this research and development activity makes sense, and there are huge amount gets involved with research and development activity. When huge amount is involved with research and development activity, then it becomes again key audit area for us being an assurance provider in this sector. And based on each category of research and development, we need to understand what kind of research or project is taken care of. What are those conditions attached to those projects? Because different projects of different nature, And based on the nature, the amount, quantum, and periodicity differ. Unless we understand those segregations and unless we understand those things, it will be very difficult for us to provide our assurance services and make our deliverables appropriate. Second major impact is that there are a lot of other certificates also. Like as I said, this research and development plays a very vital role in terms of getting the ranks, good rank. So while submitting those documents or submitting the criteria, self-assessment criteria, we also need to certify those criteria. They take our statements. We need to ensure that those activities, whether actually or not, or those amounts are specifically spent or not. And it becomes a little more critical. It is not necessary this research and development has to be taken care of itself. It can be a different area outside the coverage geographical boundaries of the institute. It could the research could be taking place in a rural belt. It could be some other area. So we need to understand how the information flows are happening in for that project. Who are the key persons involved with that activity? What kind of MIS reports? What kind of audit documents we need to do? So research development area becomes a key audit consideration as far as education sector is concerned. Then corporate governance structure. I kept it towards in, but in fact, if you ask me, this corporate governance structure actually sets the tone for education sector, finance and accounting. If the corporate governance structure of any education sector institute is good, then the risks are little low. If the corporate governance structure are less, then the risks are higher. Because in many cases of education sector institutes, as I said, again, first, majority of the education institutions are not corporate entities, are non-corporate entities. Out of those non-corporate entities, again, sizable amount are sides. And since education is a sector which plays or carries its activity very much within the society, it is also politically sensitive. And many a times, corporate governance and related party with this plays a very, very vital role. And many cases when a bigger institute, any education sector goes little big, or any institutional goes little bigger, the ultimate aim of their is that they get the status of an university. So they do apply for university, either state or central, and they get it enacted and become a sponsoring body to that university. Once university comes into play, the corporate structure or governing council structure goes mixed, private and public. There will be some public participation in the board. There will be some private participation from the sponsoring entity. So in that case, it is very critical to understand what is the governing structure of that particular institute you are doing in education sector and how healthy it is. Based on that healthiness, you zero down on your risk matrix and plan your audit accordingly, that in whatever areas you need to focus little extra, in what other areas you can focus differently and carry out your assurance services. So corporate governance structure again plays a key audit consideration in education sector. Then related party transactions. Many of you will be surprised at how related party transactions comes into play in case of education sector. As education sector basically boils down to societies and trusts. Yes, education sector more or less societies and trusts, and related party transactions primarily should not come, but it is very much there in case of education sector, because there are many sectors, those who are education issues, those are correlated with each other. Either there are common trustee members, or they are different co-constituents as far as UGC regulation is concerned under the umbrella of a particular university. So if it is co-entities or coexistence of under the umbrella of the same university, or the trustees, common trustees are there, a part of different trusts, and though everybody is in same thing, then inter-charity grant they do. And inter-charity grant, again, there are benefits as far as income tax is concerned, and they do it purposefully. And this becomes a part of not a reportable related party transactions, but in nature it becomes a related party transactions. And as an assurance service provider, we need to take care of these transactions. And the bigger the education sector, you'll find so much of volume in this category of transactions. So related party transactions, though not in general, but it is, yes, they are very much in few of the large education institutes. So related party transactions hence becomes key audit considerations as far as education sector is concerned. So these are the key audit considerations as far as education sector. I'll pause. Is there any questions right now so that we can address in between, then we move forward? Are there any questions? Hello? Are there any questions? Okay. So you take up questions whenever you feel or towards end. So these are the key audit considerations as far as education sector is concerned. So to sum up and to again real look back how this sector plays and why it is critical and interesting and little riskier going ahead, is that because of the regulations. And we need to understand clearly in terms of understanding the regulations are concerned, though majority of the institutes prepare their financials, or their bent of mind is that that we should prepare financials for tax laws is concerned. But being member of our institute, we should critically follow the applicable accounting standards. We critically follow the technical guide issued by the institute on this financial statements of non-corporate entities, and guidance note on schools. And these are the key parameters which we need to understand this. So first is income recognition. Second is grant accounting. Third is fixed asset accounting, investments. Then stores accounting, payroll, student relation management, foreign remittance, foreign fund accounting, research development, corporate structure governance, and related party transactions. Just a second. So to wrap it up in education sector, understand the environment regulations and space, how it plays with, depending on it could be a school, college, or large university, private university, or aided or non-aided, because universities normally aided to get the benefit for their students. And then finance and accounting and key.
Sir, there are
Audit
certain
constraints.
questions, if you permit, can I ask?
Yes.
Sir, I have received certain questions. First question is SS 700 applicable to education institution registered under Cooperative Society Act?
See, as far as audit report deliverable is concerned, and as a member of the institute, for me, auditing standards are mandatory. And when auditing standards are mandatory, my reportable auditing standard is SS 700. Unless the respective cooperative state cooperative societies specify a reporting format, in general, we should issue our auditor's report in terms of SS 700 specifically. So in a say, it is applicable.
Yes, sir. Sir, whether interest income is taxable in case of section 1023C3AB, in case of view of the Supreme Court judgment?
It is interest income is taxable. Interest income is taxable, but it depends on the quantum. It depends on the quantum of investments and functioning. Because see, in the primarily the taxation aspect of trust or society is that whether my 80, I have applied my income, more than 85% of my income towards the purpose for which I have built, so that I, on the remaining 15%, I should not pay tax. So in that case, there are major trusts where interest income also becomes a substantial portion of that total income. So whether that interest in whatever expenditure I'm making out of interest income, and that income will be taxable or not is a question mark. But the stand majority of the cases and assessments they have taken is that those investments are part of, we have not created for the purpose of earning income. Those investments are made either on account of a requirement of a fund, restricted fund, or endowment fund, or as a earmark fund, or it is out of internal accrual, which internal accrual per se was exempted. So in that case, the interest income is not taxable.
Yes, sir. Sir, one member is asking what are the important areas where auditor has to give emphasis while carrying out audit of all secondary schools or inter colleges or undergraduate postgraduate institutions under the control of state or central government? Whether state universities also fall under the education sector?
See, in case of education sector, the higher management education are little different. In higher education segment, lot of private parties are there, but as far as the schools are concerned, there are two types of schools. Either it is a private school I am doing, coming under either state government regulation, CBSE, ICSE, and if that private school, whether it is aided or non-aided, and pure government schools. In pure government schools, audits are based on, again, it is a state specific domain. I can say in eastern part of what in my state, the school are subject to audit. But those audits per se, they say use the nomenclature audit, but basically it's a reporting of certain MIS documents which government wants. But in case of other, whether it is a aided school or private sector, it is there.
Yes, sir.
You need to understand, yes.
Yes. Sir, what if a school accounts fees on mercantile basis? How it will affect tax liability? Can a school opt for both 12AA and 1023C registration?
Yes, see, school basically it is not the school, it is the society or trust goes for registration to LA or 1023C, and the tax exemptions are based on the returns I have filed, as I said in my discussion, previously the society or the trust or the Income Tax Act used to give a lever the choice of mercantile and cash basis of accounting. But the last amendment in the budget, the application of your income has to be judged only on spending. When I talk about spending, it has to be on cash basis strictly. So there is a bent of mind that I should prepare my accounts on cash basis only. But again, we need to understand that my exemptions are based on my returns filed. So accountings are different from what returns I am filing with the department in income tax. So my returns are extrapolation of information from my accounts. So my accounts need not to be on cash basis. I need to prepare my accounts as far as mercantile is concerned, because if I don't prepare my accounts in mercantile system, in many cases I'll fall badly into compliance with GST, because GST has to be strictly on mercantile. So it is mixed case. So in compliance with GST, other laws, in compliance with accounting standards, my own regulation, the accounts has to be prepared on mercantile basis. But as far as income tax is concerned, yes, of course, yes, I need to file returns the way income tax has been enacted or income tax demands from this. And that return has to be prepared, extrapolated on cash basis. So many a times what blunder we do, that since income tax says cash basis, my account has to be on cash basis. Books of account are little different from income tax returns. My income tax returns are based on my books of account, and my books of accounts has to be on mercantile basis. Returns will go as far as law is concerned, and which looks like right now is on cash basis.
Yes, sir. So you said in the beginning that for schools, guidance note 2005 would prevail over the latest technical guide. Member is requesting you to throw some more light on the same, sir.
If you see the scope of this technical guide, I just if you allow me, I'll just open it up. I'll
Yes.
open it up, that portion of technical guide. I just open it up that technical guide. Just a second. I'll share it. Just a second.
Yes, sir.
Now you're visible.
Yes, sir.
Yeah. If you see this portion is dealing with the applicability of the area of this technical guide. I'll take this. If you read this, entities for business, commercial, other economic, social activities can be established under variety structures. And it is actually defining what are the non-corporate entities falls under this. And here it talks about society and trust. And here, if you go down, it talks about The technical guide is relevant for the purpose of preparation of financial statement for above mentioned non-corporate entities unless any format principles are specifically prescribed by relevant statute and regulation, and formats have been prescribed. All those are there. So down here, it talks about guidance note on schools 2005.
Yes, sir.
Yeah.
So also please clarify whether the grants received for specific purpose should be shown as a liability on receipt and should be squared off when the amount is expended for specific purpose. Thereby the same is treated as a balance sheet item and not routed through the income and expenditure account.
See, as far as accounts is concerned, grant received has to be once a leg will be in liability, and if you are creating asset, then it has to be on the site. If it is a restricted grant on endowment in nature, then whatever the income you are earning out of that fund, it has to be recognized as income, and the corresponding expenses has to be knocked off against it. But similarly with this, this is as far as your books of account and accounting is concerned. But when you talk about your returns with income tax, your grant also forms part of your receipts. So there, the catch is you need to show as income. Today, earlier years, restricted grants are not falling part of your receipts. But now, since last year, it is also should be disclosed as far as your income tax returns are concerned as receipts.
Yes, so these are the questions we have received. Now, I hope you can proceed with the rest of the presentation, sir.
As I said, the contents are this much. I am open to take if further questions are there.
Okay, sir. I'm receiving more questions. So one question is audit report format is as stated in SS 700 or any specific format for an educational institution registered under Societies Act.
We need to follow SS 700. We have already
Yes,
taken
SS
this question.
700. Pardon? Relating to SS 700, sir.
Yes.
We have to follow SS 700, no?
SS 700.
Ji. So what is the position of crowdfunding? How to prove its genuineness? What is the position of crowdfunding?
Yes.
How to prove its genuineness?
See, crowd funding in case of crowdfunding, there are leeways in terms of anonymous funding. The law itself gives a leeway of anonymous funding where to a certain extent the details of the donor is not required. If it is more than a certain amount, then the donor's verification is required. So you as part of audit process, if it anonymous receipts are there, the source, if the bank channel sources, legitimate sources are there, then that will suffice our process. Otherwise, much is not required. And basically, crowdfunding nowadays is being handled or done through a particular agency. So there is an intermediary plays the role of sourcing this crowdfunding. So that is sufficient for us.
Sir, kindly put light on the university fee collected from students and paid to university. So where to show this figure, sir? University fee collected from students and paid to university.
See, if I understood correctly, suppose there is an institution which is affiliated to a particular university.
Yes, sir.
And
Yes, sir.
that
And
institution
on
is
behalf of the university, they are collecting the fees and then subsequently paying to the university.
right. So in that cases, the affiliation it is not exactly the university fee what they collect from the students that matching has to be paid, because there are license. So kind of works out as a licensing fee, or depending on what in category of university it differs, and under what act it got empaneled, be it technical or AICT or AGC, it differs. So that is totally different from what fee I'm collecting from the students. But if it is affiliated university, based on recent Supreme Court decisions and state issues, there are fee fixation committees are available in different states. Say in Odisha, there is also fee fixation committees. They ensure that for affiliated courses, because university can offer different courses, affiliated courses and non-affiliated courses. For regulated courses, the fees are again regulated. There is a cap that I should charge this much of fee to the students. So whatever the fee they charge as far as regulation is concerned, they recognize as a revenue. Out of that fee, some licensing kind of licensing has to be discharged towards the affiliation to the parent university. So that goes as an expense, but generally it is not a massed amount which they collect it from the students, because from the students they collect as a towards education fee. There is not something called university fee. They collect it education fee. In case there is a specific entry in their manuscript that this is the university fee they are collecting, that could be a matching scenario, but otherwise in general it is not matched. So whatever they collect from the students goes as the income, and whatever they pay for the affiliation, it goes as expenses.
And in case of recognition of fees, it should be cash basis or accrual basis, sir?
As I said, my books of accounts in terms of the guidelines available with the institute has to be on accrual system. There has to be cut-offs. But as far as applicability of trust accounting, trust and society returns, it has to be cash basis as far as the law stands today.
Yes, sir. Sir, can we sign two sets of financial accruals as well as cash basis for income tax purpose?
See,
As
filing
an
of
auditor.
filing of income tax return is an extrapolation of information from your books of account. There could not be a scenario where you sign different set of accounts for income tax and for other purpose. As an entity, I should have one set of books of account. For income tax purpose, that books of account is sufficient, because I need to explain in case there is a requirement of explanation. But in my income tax returns are extrapolation of information from the single set of financial statement. But there are entities, those for streamlining their assessment processes, they want a particular kind of financial statement as which is matching to their returns. In that case, specific purpose of financial statements, one may do it, but it is not a separate set of financial statement. It's a specific purpose financial statement for that particular return. But as far as one issue is concerned, there has to be one single set of financial statement.
So under section 34 of the Maharashtra Public Trust Act, is it auditor's
Hmm.
duty to prepare the balance sheet and income statement? Member is asking,
Sorry?
is it the duty of the auditor to prepare the balance sheet and income statement as per the under section 34 of Maharashtra Public Trust Act?
That's what I'm saying. There are different state regulations for college audits. As I said, in Odisha, the wordings are little wrong. As a member of the institute, certainly I cannot do the audit and prepare the financial statement.
Yes.
So there are certain wording issues are there. Basically, it is not audit; it is only preparation of accounts. But in no way I can do the both preparation of accounts and audit. Either of the
Yes.
job I can do, but in case of many state regulations in Odisha also the same case, but they have changed of late the wordings in their regulations. Here we prepare kind of MIS system for them and prepare accounts, but we don't audit it. We don't issue any audit report to this.
Yes, sir. So second last question, I have two questions more.
Yes.
But one question is, sir, for the education sector from surplus, if there is any surplus in the education sector, can the education sector invest in equities?
See, technically, there is no restriction of investing in equity unless there is a restriction or stipulation given in the bylaws of that trust or society. Because investments has to be done prudently. Since education and charity goes hand in hand, and there is a equal public and government participation in any educational sector, equity investment found to be a little riskier. Technically speaking, and any educational institute is open to invest in equity, but again, there are in majority of cases there is a restriction in the bylaws itself that they should not venture into equity investments. So, if there is a stipulation in the bylaws itself, then the education institute cannot invest in equity. But as far as law standing is concerned, and if it is not a government-aided institution, they can invest in equity.
Yes.
So it's based on what bylaws talks about, or what if it is government-aided, what regulation talks about.
So last question. Sir, for financial year 21-22, expenditure was to be booked on cash basis for income tax. In the
Yes.
previous year, depreciation was claimed as application of funds. So how to
Yes.
adjust the opening WDV of fixed assets in the application of funds?
That's what exactly I was discussing in my deliberation. Grossly on this aspect, we have gone wrong. It's a big miss. This is a big miss, not on account of non availability or non-availability. It was not clearly there. It was earlier. Now it is full clear. My books of accounts, please understand, my books of account are different from my income tax returns. But unfortunately, in majority or most of the cases in trust and society, my books of accounts are only prepared to match my income tax returns, which should not be the case. And that's what our institute regulations or those technical standard talks about. My books of accounts has to be on accrual. Since there is a hybrid system of accounting I have done over the period of time to match my cash flows and income tax benefits, this issue has cropped up. So my books of account has to be on accrual. There is no question of adjusting. You see how you correct the positions of books of account in mercantile system or accrual system of accounting. Your income tax returns are as per the income tax laws are concerned, and today it stands cash basis.
Yes, sir. So these were the questions, sir, I have fetched from the members. So if you would like to put some more light on this topic.
No, I think from my end it is done.
Sir,
I am open to take any questions if it is there.
Sir, we
Offline
have
also.
received these questions only, and hope
Yeah,
I have our
post the
members.
session if you. Sorry.
Pardon, sir. Pardon, sir.
I said post the session also. If you receive any questions,
Yeah,
you
if
can
I
forward
receive any
to
question
me.
post the session, I receive any question, I'll surely forward to you for your answers. Then I'll forward that to same answers to the concerned member, sir.
Yes.
Yes, sir. Yes, sir. So on behalf of AASB of ICI, so I extend my heartiest thanks towards you for sparing your valuable time. It was wonderful deliberation, and you have covered everything about the education sector and various key audit considerations relating to that, various regulations and various key audit considerations relating to education sector. I have gained a lot through your deliberation. Hope our members have also gained, and all their queries are also solved with their so many questions, sir. So once again, thank you so much, sir, for your wonderful deliberation
Thank you so much.
and for your expert advice as well as your precious time, sir. Thank you so much, sir. Thank you so much,
Thank
sir.
you so much.
Thank you, sir. Namaste.